Hello, YouTube. Today we're going to talk about how I was wrong. I thought this was going to be the start of us actually moving lower or potentially power slamming to our 50 DMA as I laid out on the weekend deep dive to match the Dow. Instead, we have a cup with a handle, and now we're actually attempting to bounce off of it, which means that we've done something we've not been able to do ever since we got to our high. We got a lower high, lower high, lower high. There's like a couple cent higher high here. We're going to ignore that one. And then for a large part of the day, we were really struggling at yesterday's high of the day, 413. They walked it all the way down in pre-market, and we actually did really good on a closing basis. So an easier way for us to look at this is going to be by just slapping in a couple more lines. And we can note here that we actually have a double uptrend, which means we have one uptrend and a secondary one, and we're still stuck in between it. So at our high of the day at about 415, we just didn't quite make it back up to here. And now with the doji, it means that we have a very clear range for what to break. I was very surprised we didn't move more today. And just because you're wrong doesn't mean you have to lose a lot of money. I actually closed the day out green. I've been on a hot streak lately, and that's just because I've been good at managing the risk. So if we're stuck between going down but also going up, which lines have more significance? The green ones. Why? There's more time on it. And by going sideways tomorrow, we're actually going to escape this downtrend. Why? We're going to be breaking over it. So I'm going to bring my lines back in now. And if we look here to the chart I showed on the weekend, which is our 1 month chart for SPY, we note that if we are above or below 409, that is the critical point. Right now, as we're approaching mid-month, I got a feeling these bears need hugs, they need kisses, and they need some chocolates. Why? Well, because every opportunity they get to slam this thing, the bulls are just like, I see you and I buy you. That's what's been happening over and over. So just looking here at our 1 month chart for S&P, we zoom into a 15-minute chart and let's see what's been happening. Oh my goodness. All right, as I zoom out here and I look at this objectively, first thing I notice just that there's a massive inverse head and shoulders. We've bounced off 408, we formed our head down at 405, we bounced back off 408, and then inside of this recent price action, we have something very similar. We have a what? Oh, another inverse head and shoulders. That's right. We gap down. Oops, let's go back here to our resizing. Gap down, pump up today, form our high of the day at 415, crash land on strong support at about 408.50, and then just bounce, bounce, bounce. That's all that really happened. It's that simple, literally. I know the bears are going to say, "Oh, well, here's why it's big bear," and the bulls are going to say, "Well, here's why it's big bull." It's not really all that easy. Sorry, it's not that simple. I think what we have to do instead is like, well, the chart's getting a little bit more complicated, but there's more lines on it. Why? Well, because it's not as easy as it was before. We're still working on the W, but we're not going on this current angle of ascent I had outlined, which means if we're not going up at this angle of ascent, we have to look to our next one, which means we have all the way until March 7th to actually get above 420. Is it going to take that long? Are we getting indigestion now? I'll talk about a few things in a moment here, which are really interesting, including vickspiration, which happens tomorrow. And the VIX is down by what? Oh my goodness, 7% back to 19. Yes, I'll show you the reason why in a moment. And we talked about the options implied move going into Friday for SPY. What happened? It closed down 19 cents today. Why? They're burning the premium, right? They're killing it with fire. Oh my God, get rid of it, burn it. There is just so much torch premium right now. So if we understand where we're at here on the daily, we understand where we're at on the monthly. We have to be above 409 for us to get that upside potential here. And there we go. If it's 10 points, it's still 10 points. We have to fall below 409 for it to really be in play here. Let's look at one more chart because I think it's actually really interesting to think about where we were just on the weekend compared to like where we are now. Well, we got about 408. We got 418.5, 416.5, and then we got 405, which means roughly $2 for the lower high, and then about 1.5 for the secondary one. That's like not so bad. Yeah, but we have an inside bar. If we look here to the E-mini futures, well, we're going to notice that, oh, wow, it's like actually really close. Yes. So they halted the rally in pre-market, which means the bears defended where we would expect them to, and the bulls defended where we would expect them to. Higher low, lower high, inside bar. Yeah, it didn't break. We're off by about $2. 4188, 41865. We're off by about 2 points, right? It's not all that lot. Just a little bit of a push higher, and we would have broke it. So with all of this in play, what does it mean? Well, it means that we made roughly equal progress up and roughly equal progress down, but we bounced off my critical line on the white chart, which is what? 410.64 for SPY, or 4101.75 for the E-mini futures. So if we look at all the charts, we're like, whoa, okay, well, bulls definitely showed up. We pushed higher. We look at QQQ on the weekly. Oh, wow, we're back above 305.12. Yes, we are. We're currently at 306s. So, okay. So that would be the second close over 315. We're in bull market territory. Correct. But we got one below. So I'm not quite sure where we're going to go. But on the weekend, we talked about the turning point. So if we understand the stakes are high, now let's try to understand what the data was. Because, wow, if the bears wanted a reason to take us down, they had it today, in my opinion. Why? This number right here, this is what the bear number is. Came in at 0.5, which means we're actually expanding at a higher area month over month. I'm going to show you a couple more things now too. What do we have? All right, go show more. These green numbers on the side here show that they've actually been revised higher. 0.1 to 0.2, 0.5 to 0.4 to 0.5, 0.1 to 0.2, negative 0.1 to 0.1. What does that mean? It means inflation's been revised higher. But as we noted on the weekend, if we're truly going higher, the market shouldn't care what the number is. It should just continue to squeeze, continue to go higher. And I have a data point to try to suggest the reason why that's happening. So, okay, core inflation flat, core CPI down versus the previous number, but it's definitely going up a lot less than before. Sorry, it is decelerating, but the amount of deceleration is like very marginal now. 5.6 to 5.7, like whatever, right? It's not even all that big. Market doesn't seem to care. It's still pointing down. So that's what it's focused on right now. And these positive revisions all got taken in stride. The market's like, yeah, whatever. Kill the premium. So what happened? I'll show you. Vickspiration happens tomorrow. And let's look and see where VIX actually closed out. I think it's really interesting as we try to think about, man, what was the options implied move going into today? Oh boy, it was pretty big. If we look here at VIX, it closed out at 1892. Where are the calls? Where are the puts? Well, below 20, all the calls get smoked. So if we look here, if we close above 20, all these calls get smoked. This is for the expiration on Feb 15, which is 2 days before SPY. We're looking at the 16s. And here on the put side, well, they're trying to kill all these things too. Look where the volume is. Look where we closed out, right in the middle at 19. So yes, they stomped the VIX today. It will expire tomorrow. Then we look forward to the S&P 500, and we understand that, yeah, these guys were getting to work, right? Yeah, we closed out exactly flat. So what happened? Well, equal opportunity. A little bit of red for the bears, a little bit of red for the bulls. All these numbers are red. All these numbers are red. Why? VIX got stomped. Option implied move got flushed out. And now we just look at where the positioning is. So if you look at the at the money here, here we're at about 412. Let's just look at the at the money. So we're looking at about $3 higher, or about 415 for break even now. That's where there's some volume. That's where there's open interest. Okay. And on the put side, what's $3 minus 412? Well, that's 409. We went over this yesterday too. There's volume and there's interest. So that's what we're looking for going into Friday. Either a whole bunch of nothing, or they're just getting to work, right? They're burning the premium. That's what they're doing. And if we look forward here to the next expiration, the reason why I like to do this is because it gives us clues as to whether or not they're already positioned for the next 30 days. So as I look here, yes, they already are positioned. For where? March 17th on SPY 16s, we're looking at, there's a lot of open interest here at 420, 76,000. Looks like a call spread. 410 to 420. And on the put side, there's volume, but it's half the size. So the bulls definitely want us. They want us to go where? To 420. And these babies are juiced up. They're worth $5. We got to get a 425 for them to get their money back. That's like a big number. Yep. Looking at fear and greed, we're still elevated in greed. So we're back testing previous greed. We're bouncing off that. It appears bullish. Let me look here to the note that I alluded to before. Investors still overweight cash. Investors overweight commodities, underweight equities, but less underweight than previously. Interesting. Yeah, that's interesting. Why? It's interesting because it means that right now they are positioned for more. They're positioned for more pain. The pain trade right now is still going higher. We look at the yearly gain so far. Market's up by 7.9%. QQQ was up by 15%. Man, these guys are underperforming. Why are you managing my money? You suck. Give it back. And then the last thing we're going to look at here is just week to date put and calls, because yesterday we showed you that it's really evening out. And when we look at week to date, or 13 to 14, there is no sweet, sweet Valentine on here. SPX has lots of puts, but otherwise it's actually bullish for SPY. roughly equal for QQQ. For Tesla, it's actually skewed bullish. For Microsoft, bullish. Man, it looks like these bulls are making an attempt. So I look forward to seeing you tomorrow. Thank you for watching all the way till the end. Wish you all the best of luck. Thank you.